Every month, headlines scream about the housing market. Prices up, rates falling, market crash coming. We consume these updates like daily news, looking for a clear buy or sell signal. But what if I told you that approach is precisely why many people make poor real estate decisions? Most housing market updates tell you what happened, but rarely how to truly understand it or what to do about it. If you're serious about building wealth through property, you need to stop reacting to the headlines and start strategizing with the data. The real estate market is complex, and simply glancing at a median home price or average interest rate can be deeply misleading. For first-time homebuyers, a slight dip in prices might seem like a green light, ignoring rising interest rates that impact affordability. For property investors, focusing only on rental yields without considering vacancy rates or local job growth is a recipe for trouble. People relocating or upsizing often make the mistake of comparing broad national trends to their specific local market, leading to missed opportunities or overpaying. The hidden problem is the lack of context. Data without strategic interpretation is just noise. It leads to analysis paralysis, fear of missing out, or worse, making impulsive decisions that don't align with your long-term wealth goals. Experienced buyers and investors don't just read the numbers. They interpret the eye signals. They understand that market updates aren't predictions. They are data points that, when properly contextualized, inform a strategic approach. The underlying principle here is discerning trends and interdependencies. What does a slight increase in inventory mean when sales volume is also up? What does stable pricing tell us if average days on market are falling? They approach the market with a "how does this affect my strategy and my goals?" mindset, rather than a simple "is it good or bad?" This shift from passive consumption to active interpretation is foundational to making smarter property decisions and building wealth. At Keystone Property Advisors, we advocate for a structured approach to market updates. We call it the Keystone Market Compass. Instead of getting lost in a sea of statistics, focus on these three interconnected pillars to guide your decisions. Pillar 1, Price and Value Metric. Look beyond the median sales price. Track price per square foot, average discount from asking, and property tax assessments. Are values appreciating sustainably or speculatively? Are there signs of overvaluation or emerging value? Pillar 2, Supply and Demand Indicators. Focus on inventory levels, months of supply, new listings, and pending sales. Is inventory tightening, indicating buyer competition, or expanding, suggesting more buyer leverage? What's the absorption rate? Pillar 3, Affordability and Economic Drivers. Monitor mortgage interest rates, local employment growth, wage trends, and population migration. How do these factors impact a buyer's ability to purchase and a renter's ability to pay? This provides crucial insight into underlying market health. By analyzing these three pillars together, you gain a holistic view, allowing you to see the true direction of the market rather than reacting to isolated data points. Let's apply the Keystone Market Compass to a hypothetical scenario for this month. Suppose we see median sales prices holding steady across your region. Sounds neutral, right? But then, Pillar 2 reveals inventory levels are slowly but consistently rising, and average days on market have slightly extended. At the same time, Pillar 3 shows mortgage rates have just seen a modest dip, making payments slightly more manageable for a segment of buyers, and local job growth remains strong. For a first-time homebuyer, this isn't a neutral market. It signals opportunity. More inventory means less frantic competition, and a slight rate dip improves affordability. You have more time to find the right property and potentially negotiate. For a property investor, this suggests a market where well-priced quality assets might start to sit a bit longer, creating room for negotiation. Strong job growth and stable prices indicate a healthy rental market, but rising inventory means you need to be strategic about renovations and pricing to attract tenants. This integrated view empowers you to make a move with confidence, whether that's to buy, sell, or hold. Connecting these monthly insights to your long-term wealth-building strategy is where the true power lies. Understanding the nuances of price trends, supply dynamics, and economic factors allows you to make informed decisions about property appreciation over time. You can identify optimal times to enter or exit a market, maximizing your equity growth. For rental property owners, a strategic market update helps optimize rental income and manage cash flow by understanding tenant demand and competitive pricing. It enables you to use leverage wisely, build a diversified portfolio that withstands market fluctuations, and achieve financial stability through well-chosen real assets, rather than gambling on short-term market swings. This isn't about market timing, it's about strategic positioning. The housing market is a dynamic force, but it's not an unpredictable one if you know how to read its signals. By adopting the Keystone Market Compass and focusing on a strategic interpretation of data, you move beyond reactive fear or impulsive decisions. You empower yourself to make smarter property choices, think long-term about real estate, and build wealth strategically, one informed decision at a time. This isn't about speculation. It's about education, execution, and enduring value. If you found this strategic approach to market updates valuable, hit the like button, subscribe to Keystone Property Advisors for more deep dives, and share your biggest market questions in the comments below. We're here to help you navigate your path to property success.